Okay, so this is his, in his own words, for trading these kind of things. So very quickly, to not waste time. So for those, perhaps who don't look at European news or European markets, there's all these issues about no confidence in needing to choose a new government, new prime minister in Italy a few weeks back. So we're now actually going all the way back to, let me just find the date, the 13th of January. Okay, so this is not, this issue is now being resolved by markets, but this is when we're trading in 13th of January. Let me just resize the picture for you guys. Apologies. I believe, let me zoom in a bit. Okay, so this is the 13th of January, and this is when they had like issues in the Italian government about them, being able to continue no confidence or something. And essentially, one politician, Renzi, he basically threatened or did, I believe, pull his ministers from the government. And essentially what that means is now that there's huge issues of we may need to reform, to come in and bring in a new prime minister, who, by the way, became Mario Draghi. And then he had to form a majority government to ensure continuity of government. Or if that fails, then you need to have early elections. And as you know, the markets hate uncertainty. They just hate it, okay? There's nothing worse for markets than just uncertainty, no matter what it is. And this just creates a lot of uncertainty based on, you have these government issues in the middle of a pandemic. What the hell is going on? You need to, yeah, it's not good. So basically, this will lead to risk off flow, okay? But this is a risk off flow special. And why is this a risk off flow special? Because we're trading the BTPs, the Italian 10-year bond, okay? And this is one other thing I think we can, I'll show you very quickly. So we talked about bonds being a safe haven, okay? So generally, if people are scared, they buy bonds. But then we talk about the bond quality, or in terms of like credit quality. So obviously the highest credit quality rating in the world are the US bonds and the German bonds as well. They're like seen as the ultimate safe haven. That will probably not go away in the foreseeable future. That is like the best. Then you have bonds from different countries which are not seen as economically strong or like a bit more unstable. Like, for example, you have in Southern Europe. So Spanish bonds, let's say Italian bonds, whatever. Not in Europe, but anywhere around the world. Perhaps, let's say in South American economies as well. The worst of the worst, obviously, unfortunately, being, a lot of countries like Argentina defaulting on debt a lot of the time. But anyway. So generally, when things are not, when the crap hits the fan, the bonds will go up. The BTPs will also go up generally, okay? But BTPs are also a peripheral market in terms of the bonds. So when there is a local issue in terms of the bonds, in terms of a domestic issue in terms of the Italian government, then that bond, because it's not seen as the like a core as a core market bond like in Germany or in the US, the BTPs will actually be treated as a risky asset. So actually, the BTPs in this case will sell off, just like the stocks would, or the DAX would, or the S&P will sell off. Okay. So this is the more unique property of the BTPs. And interestingly, when you have government issues with the German government or the American government, they are still seen as safe haven. They will still go up on that kind of risk, but it does not happen with peripheral bond markets like the BTPs. So this is the one thing you need to keep in mind for this risk off flow. Okay, so basically the comments came out, and this is Dem in his own words. So he says he first hit the BTP, 240 lots, and then he said, I didn't affect. So the German Bund, so the German 10-year, he said, I didn't think it was going to affect the Bunds that much, so he's hesitant, and he hit it late, and he didn't get much size in the Bund, relative to how much he did in the BTP. So he did BTPs and then Bund second, and you'll see that kind of flow now. And the reason for that, there hasn't been an established themes where the spread plays are dominant on the news. So there's now, for people who trade bonds, and I think this might be something you'll learn about, Trey, is the fact that people always talk about the bond spreads or the yield spreads between different bonds. And basically, when you have something like, when people say to you, Bund BTP spread, what the hell does that mean? The Bund BTP spread, okay? they will say that will have a certain value. I forgot what it is off the top of my head. When we talk about it, we usually mean in terms of yield, okay? I forgot what it is off the top of my head, but just generally, when the Bund BTP, when there's issues with Southern Europe, this spread will widen on issues, okay? When there's safety, when the ECB comes to save the day as usual, when when they provide stimulus or whatever, the spread narrows, okay? How exactly this plays out, why, again, I'd love to do this on another stream, especially with some of the senior guys who can explain this extremely well with a lot of examples, but I don't want to get into too much detail about this, but on good news environment, there we go. So that's why we talk about the Bund BTP spread, and we're all watching it based on these kind of news. Okay, so again, going to the thing I was talking about yesterday, when you prepare for news, you understand, okay, all this Italian stuff is going on. I've got to get the Bund BTP spread because everyone is going to be watching the Bund BTP spread. If that spread suddenly starts going crazy, the market's going to see it. I need to see it first if I'm trading the news. Okay. Spread plays are dominant on news, i.e. the BTPs puke, the BTPs sell off, and the Bunds bid. So this is the correlation, just how we saw in the Andy stream. We're now going to be thinking about the correlation between when the BTPs sell off or they puke, you'll expect the Bunds to go bid. Okay, that's the correlation you'll see on the ladders that he's going to trade. On risk of comments, okay? Bund is the safe haven. We pile money into this on risk off. BTPs is now seen as risky, so we sell the BTPs and we buy Bunds, okay? It was more of a local crisis at this stage, so he wasn't too sure on the spread, how he was going to react. Anyway, so he sold big clips of the low in euro, and he sold the euro because he thought the move in BTPs was really big, and it might affect the euro as well. Just generally, obviously Italy's part of the eurozone. If it's bad for Italy, eventually the euro is going to start carrying, and we start to sell off in the euro. But then, sort of reversed. Okay, so here he starts the day. So on the day, he's got a bit of, let me just double check. If I just zoom in a bit, no. Let's see if we fit it. Okay, I think that's just, okay. So if you can see here in the corner of my screen, he's up a decent 30K on the day. So he has a bit of padding to be a bit more perhaps aggressive, even though he would be the first to tell you, he will not care so much about losing the money if he is too aggressive as he's opposed to losing the opportunity cost of the event. Because he is someone who trades a lot of macro events, these events are not happening ever so often, especially in the way they do. He is someone who's very much based on the asymmetric opportunity to just go really, really big on the asymmetry when there's something really big, going on. And so he has huge FOMO to miss the event. Okay. So he'd much rather risk the event and get in aggressively and perhaps being, down or up or whatever, than to miss the entire opportunity. But anyway, on these kind of events where he's got a bit more padding, he can be perhaps a bit more aggressive and so on. So there we go. So Dante, how much is his clip? I'm not sure because it changes a lot of the time, but I mean, he's clipping like, I don't know, you'll see now, he'll go up to like, I don't know, 400, 500 in the Bunds, 200 or something in BTPs, 300 in BTPs. There's videos, if you guys want to watch, of him trading oil and SPU with like several hundred lots on the Soleimani assassination. I don't know, but it's in the 100, like anywhere between 500, 600, 700 lots, and depending which market we're trading about, obviously. Something like that. And obviously at the same time as well. So one thing you'll see about with this trader, if I start playing, is that he will very rarely trade one market. He'll be at least 2 or 3 markets. Again, diversifying his position. So, okay. So this is a comment. This is the difference in trading. So this is, if you're going to start trading these kind of events, you have to understand the difference in the kind of flow. The one Andy was trading earlier was an event that moved for hours and hours and hours. This is a comment about Renzi pulling his ministers. So if I quickly show you the time on his desk, right now in London time, it is 5:16. So that's basically when the comment came out, okay, when we heard it. If I play and you'll see, look at so I'll show you the ladder. So this here, the white, is the BTP market. Okay, that's the Italian 10-year bond. The orange is the Bund, the German 10-year. We've got the US 30-year here in gray. The gold, the SPU in black. The euro here also in orange, if you can see my mouse. And a few other ladders, but they're basically irrelevant for now. And to be honest, all the ladders here are nearly all irrelevant other than the white and the orange here, and the BTPs on the left and the Bunds on the right. So I just want you guys to just focus on these two ladders and just see how when one makes a low, the other one will start creeping up and reacting to each other based on this flow. So watch out for the comment. And guys, look at his mouse as well to see how he reacts. So you might see the mouse in the recording here as well. So where is his mouse? I'll try and not move my mouse on the screen. His mouse is black on his screen, so you can see how he reacts. You'll see it going on to the BTPs. See, BTPs is slowly starting to offer. Someone's heard the news early. It's starting to come off slightly, a few ticks. It's decent size, hitting it like 50, 100 lots. Okay, he's in. See, he's just getting his clips in as quick as possible. 160, 200, 260 lots he's in now at BTPs. So you see, he tried to get in, and look how aggressive the BTPs. This is the nature of the comment. It just goes bang, and it just goes. So the name of the game a lot of the time is to hear it and just to understand the relationship, and you don't think about it. You just, he acts. And look how much size away. He's gone from 260, and now he's took profit on half of his position already. He's locked in at least, I don't know how much the BTPs just came off there, like, I don't know, 50 ticks, 60, 80 ticks, and just got 100 lot out of the, out of BTPs. And he's very dynamic. That was such a big move, and you can see how he's just starting to scale out now again. Okay. And interestingly, I would expect him when I was watching this. Okay, now he is in the euro, if you can see. So I'll just pause this very quickly. Look at the euro now on the left, also this orange one. He's now short 60 lot in euro because, and this is where he can be more aggressive. You're like, what the hell? He's selling the low in euro. He can be a bit more because he thought the euro didn't react as much yet, and because the way the BTPs went, absolutely just collapsed off the screen. You would expect the euros to be a bit more aggressive, and to be a bit more aggressive and just slice the lows, okay? And because he's got already a nice P&L padding, see if I can show you that. I'm not sure if this zooms in well, but he's up 98k, so just short of 100k on this trade. So he has a bit more space to be a bit more aggressive if the trade takes off, and all of a sudden the Bund, the stock market cares, the Euro stocks care, the DAX cares, and so on. Okay, and the Chris, the black notes, they're highlighted prices. So he probably highlighted this price for some reason. Maybe it was some level he was watching, and just so on the ladder you can highlight the prices. So when things are moving around, you don't have to think about it as well. Or it might be the low of the day. You're right, Stephen. One of the two. It's some kind of significant price essentially. No, actually, I think his ladders, here's the high of the day. No, I think it's just the price he's highlighted beforehand. Okay. But again, 100k, you might be thinking, wow, 100k, that's a lot. But look, he's had days where he's traded over 7 figures. Okay. 100k, cool, it's healthy. He's not gonna, sneeze 100k, but he's not gonna be trying to trade his P&L like, oh, I'm up 100k, I've got to be defensive, whatever. The 100k is just a byproduct of him being fast, and that gives him the ability now to be a bit more, if the opportunity is there for the markets to absolutely go mental, he will not hesitate about just going in full size in like 3 markets, and will probably just at risk of losing some of that 100k, maybe down to 50k, provided that the opportunity is so good that he can turn 100k into 800k in the flow. So he's more about just trading this opportunity as best as he can. I'm showing the P&L because it's important to be transparent in showing it and understanding how he's playing it. But he's not so like obsessed about it. He's just got in the corner just so you can be aware of it. Okay. So let's just play this while I'm talking. So again, notice how the BTPs is making the lead. And look, what's he done? He's literally lifted the high in the Bund. So the Bund here, this is the Bund here in the orange, as you can see. And he's put in already 180 lots at the highs. He literally just went bang, take the highs in Bunds. Because why? This is the correlation. BTPs come off, the Bunds will care because the Bunds, we're now having risk off. The BTPs are selling and the Bunds are now going up because it's a safe haven bond on the news. Okay, so the Bund reacted quite late to it, which is which is nice because in this case it does give you a bit of an advantage to just get the early lead and to get aggressive early on into the bund. So you can see now he's managing his position. He's now short 150 in the euro, 150 lots in the euro. He's taken most of his clip out from trade. That is his average fill. So if you guys see a light blue color like here, 46, that's his average fill based on all of his size currently. So he's kind of long 220 in bunds, short 38 in BTP, and short 218 lots in the euro. So you can see now he's gone from just the BTPs to now trading the bunds and the euro based on what the conversation I showed you with him earlier. And now all he's doing is just trying to manage his position. Is there follow-up news? Is the news going to be even worse than the market's heard? And if the markets, you can see, is closing in now on 130k, but he's just breathing his position in and out. And he's thinking, okay, follow-up news. Is the news going to get worse or is it going to get denied? What do I do? If it gets denied, I might have to puke my entire position, just get out of the whole thing, liquidate, and then see, maybe reverse. Or is the news going to be even worse? And all of a sudden, these markets are going to go even more. And then you can see on some of the other videos, because we've got plenty of his video on our YouTube channel, he will double down if there's reason for the opportunity, like the news will be even worse. He will just go probably full size and everything else. You can see also he was trying to just get in a bit here in the DAX, but I think that was more of a peripheral trade. He was just trying to express it through the equities. But the point is, if I have done a good job of explaining to you risk on and off flow, the thing he is doing here will make absolute sense to you guys. He is buying bunds, one of the ultimate safe havens there are, the German 10-year bond. He is selling the BTPs because of localized risk in Italy, political risk, which is the Italian bond. He is selling the euro because it's just euro negative in the situation, and he is selling the DAX, which is an equity, because obviously equities don't like uncertainty, and you have that risk off being shown in the other markets. Okay. And you notice how unreactive the euro is actually in this case. If I just quickly flick my mouse, you can see. Simon Walker, yes, it is Demetris, yeah, them trading this. So you can see his euro is starting to creep back, but it hasn't really done anything. And he's willing, as the bonds are still active and the bonds are still discounting the information, he is still very much willing to keep his euro, because his average fill price here, the mark is basically where he's in. So it's not really pressuring him at the moment. If he's going to go offside, he's going to lighten up very, very quickly. Is there correlation with the size? If you mean trading size, to answer your question, yeah. So what do you mean about correlation with size? Sorry, because I think I don't. There's so many ways I could answer that, just to be. Yeah, Aaron. So no diversification, trying to maximize or capitalize this opportunity by playing all the correlations. There is diversification if you think about it another way. All of this flow, in a way, is like one trade. But he's expressing that trade rather than saying, okay, risk off, I'm going to buy bunds. Okay. That is not necessarily dangerous, but sometimes the market you might just turn out to buy will not move. And you'll be sitting there saying, you'll be shouting your head off saying, oh my God, this stupid bund is, we literally will do it. Like, it's not moving and everything else is moving. Why is it not moving? A good way to counter that is to express your trade through different markets. Because sometimes you might just buy the lagging market, or the market will just, one of the markets which you will not care. But it's okay because you are in another market as well, same time. So you can be patient, as you saw Andy in the other video. You can be patient for with the S&P and wait for it to play out, and it gives you a bit more breathing space, to think and to act essentially. And you can see now he's trying to sort of undo his. He's thinking of coming out quickly of his euro because it hasn't moving and is slowly coming back against him. But he is patient because he is very patient because he's got a good chunk. He took such a good chunk out of the BTPs and the bunds and whatever. He doesn't have to just get scared out of his trade. Okay, so 200 lots in the bund, 150s. Yeah, so 100% about the correlation with size. If I understand the question correctly. So it's kind of like your size depends on the opportunity. So if it's like a small comment, whatever, and the markets aren't moving that much, or you get in and then see what the markets are doing first, you may only put in like, half size towards full size or so on, and then see, and then maybe add in later. If the comment sounds really big and the markets are reacting really big and it's like ridiculous opportunity, you will go full size. And if you guys want to see an example of full size, of what full size looks like on ridiculous news, then we've got them trading the vaccine news in November of the Pfizer vaccine, which is risk on, and obviously the news we've all been waiting for the entire year, which will be probably the best opportunity all year. And he put on gigantic size and everything. I can't even remember how much size he put on, but I think he made over $1 million on that day. I think within literally like 5 minutes. Again, I'm not saying $1 million to be cool or like, show you how much size, whatever, or how fast he did it. It's just understanding the P&L expectations and your size expectations based on the opportunity. Okay. Because of the size he was doing, if you're putting that huge size on opportunities which are not that good, well, anyone who plays poker, anyone who plays any sort of probability games will tell you, if you're putting on huge size all in on something that it just isn't worth it, then you're not going to last very long, right? So different tactics for managing your size based on the opportunity, and it did seem like a good opportunity from the way the BTPs just flew off the page. They just teleported off your ladder. Okay, so I hope I answered that question correctly, but there we go. Anyway, so the trade here slows down a bit, and you can see, and this is for the people perhaps looking at the price side the first time. Very obviously, look at how the BTPs have now just like, they're not moving how they moved at the beginning. It has shifted its personality in how it moves. The bunds have now gone a lot slower. They're not reacting as much. Maybe the market is now taking a step back and thinking, okay, the Renzi comment sounded a bit important, maybe not, and everyone who shorted are probably now, in or slowly taking profit or something. But that's how we do the day, and then basically the rest of the day is just managing his size, and the recording is another few hours, like 6 hours. So I'm not gonna obviously show the entire thing, because the main gist was not even showing you the execution, because we have a lot of execution videos on YouTube, but just for those guys understanding really the crux of correlations and how they're supposed to play out and so on.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.